Hey, good morning. Let's go over today's trade plan. So in the overnight session, for the most part, the market has been balancing within yesterday's range, and the buyers continue to be in control. Heading into the open, we have pre-market resistance at 46.5 to 47.5, and at this point, in order for the market to put in a sustained breakout beyond 46.5 to 47.5, we want to see broad market strength and continued and sustained upside momentum. If those conditions are present in real time, then we know that the environment is already bullish and it is conducive to upside movement. So as long as we're seeing that real-time momentum, then we could break out again to the upside, test the 49.5 to 51.5, which marks the all-time high. And if there is sufficient momentum and volume, then the market could even press to a fresh all-time high today. On the downside, we have initial support at 37 to 39.25, and that's an area where responsive buyers can be active on first test, and in the event that we start seeing sustained downside momentum and a lot of intraday weakness, then perhaps we can head lower and test Wednesday's low of 34.75. We have an HVN at 35.5, and then we have better support at 27.5 to 30, which marks the recent balance breakout area. So off the open today, the main question is going to be whether we are continuing to see signs of bullishness in real time. The advanced decline line does not have to be extremely positive, but you do want to see it in positive territory and trending to the upside. And more importantly, we need to see that upside momentum with the NYC tick holding above zero and at least printing around +5 to 600 in order for the market to continue going higher. And then from there, we can test 49.5 to 51.5. It marks the all-time high, so it's still technically a spot where sellers can be active. But if that upside momentum continues in real time, then we could even print a fresh all-time high today. But those are things that need to be assessed in real time. So on the day time frame today, our short-term bias is going to be neutral bullish. So that means that we are still going to favor the long side, but we also need to see these real-time bullish indications to confirm that the buyers are continuing to be aggressive at these higher prices. If those real-time bullish conditions are present, then we can go up and test 49.5 to 51.5 and possibly push to a new all-time high. If we are not seeing any strength in real time, or if we're seeing some real weakness in real time, then it's going to be difficult for the buyers to push this beyond 49.5 to 51.5, and in that case we can continue to balance between initial support and initial resistance. And in the event that we push below initial support, given the recent bullishness, responsive buyers are likely to step in, especially if we expand the range down into 27.5 to 30. Now going down to 27.5 to 30 is still the lower probability scenario, but in the event that we do start to see a lot of intraday weakness build up and the market starts going lower, it's very likely that any push lower is going to attract buyers in this bullish environment. So buyers can be active on first test of 37 to 39.25. They can defend Wednesday's low of 34.75, and then the 27.5 to 30 would only come into play if we were seeing a lot of intraday weakness, and buyers are very likely to defend that zone as well. So today we are going to be open to both long and short setups, giving more weight and preference to the long side. And in order to short the market, we're just going to have to see some real-time bearishness come into play, and then understand that the main resistance today is 49.5 to 51.5, and that we have to see a lot of continued strength and momentum in order to bust through that zone. And if we're not seeing that strength, or if we're seeing negative divergences on the advanced decline, if we're seeing the tick holding below zero, then it's going to make it very difficult to push beyond 49.5 to 51.5, and in that case we can continue to balance in this recent range. So on the short side, we have to be very aware of the real-time situation and secure good trade location. On the long side, we know that the market's already trading at very high prices, so to justify going long at these high prices, we need to see a lot of momentum in real time, because buying up here is really more of a momentum trade. It's not a value trade, because the market's trading near the all-time high. So, this is not value. But if there is a lot of momentum in real time, then we can ride that bullish trend, but with the understanding that you need that underlying momentum to go higher. And if there's no momentum, then you're better off staying flat and waiting for the market to provide you a better reward to risk setup. So those are the main thoughts heading into the open. Let's see if the buy side can continue to maintain control, and let's see if aggressive buyers are active here. Let's see what the momentum situation shapes up to be, and we'll take it from there.